reading up on your website, jamesaltucher.com, you have a section there on investing. And I noticed that you haven't written anything since this spring, since, the early days of COVID. And so I'd love to get your views here on
Okay,
markets.
so in general, I'm an optimistic person on the markets. After 2008, I was so optimistic on CNBC that they actually kind of put me in the penalty box for a while and didn't have me on for a year or so. I was pessimistic all through the OOs. I mean, optimistic. And in March, and this just sets the stage, but in early March, and this is all documented in my writing and on my podcast, so I'm not like making it up in retrospect. In March was the first time in a long time that I said, let's just wait a little bit. Like the markets were going down huge. Everyone was asking me, is now the time to get in or is now the time to bail? And usually when the questions are so frenetic, it doesn't hurt to just wait.
Mm,
Like Bernard Baruch, a very famous investor from early last centuries, once said, I always, got in too late and sold too soon. And the guy, died with $100 million in, the early 1900s. So he did well. And March, there was so much. Investors don't really care about the economy, but they care about uncertainty versus certainty, particularly in the short term. And things were so uncertain. Like we didn't know what the lockdown rules were going to be like. We didn't even know what the fatality rate of this virus was. We didn't know if there was going to be medicines or vaccines or if it would mutate. We just didn't know anything. And we didn't know if there was going to be stimulus. Once the stimulus bill was passed, though, it was so massive, combined with all the pronouncements that the Federal Reserve was making, that there was no other choice but to invest, like mortgage. And I even said this on my podcast: mortgage the house if you have to. Just put all your money in whatever you can in stocks. Now we have another piece of uncertainty coming up, which is the election. And the election, I think a best case outcome is that there is a clear winner, and on November 3rd or 4th, one of the candidates concedes. Then I think the market goes up no matter who wins.
mm-hmm.
But if there's a long, drawn-out court battle and it's ugly and there's brother versus brother, in terms of like arguing this, that level of uncertainty, which could continue past January 20th, concerns me about the market. That said, I do think another stimulus package is going to get passed. I do know the Federal Reserve is pumping as much money as possible, as close as possible to stocks. They are buying up everything they can find. They're desperate for inflation. The only way they're going to get inflation is if the stock market goes up. And there's that saying, don't fight the Fed. So I do think that if you own stocks, keep owning them. The stock market in the long run is going to do fine. But right now, there's a little bit of uncertainty going into the election. I wouldn't be so eager to invest today with the election 27 days away.
Mm-hmm.
And I hate playing both sides of this, which sounds like I am. I'd rather say, oh, it's horrible, it's good. The Federal Reserve wants the stock market to go up, and they will beg, borrow, and steal as much as possible to do it, and they have trillions of dollars that they could do it with, so the stock market's going to go up. But there will be uncertainty with this election, because I don't think the winner is going to be decided by November 4th. I hope it does. I don't think it will be. And there are some very worst-case scenarios after November 3rd.